Hello and good evening. Welcome to part 3 of your SBL revision sessions. We'll be covering chapter number 17 till the end in this session. Let's get going on chapter 17 first, which is professionalism, ethical codes, and public interest. The best part in the SBL exam is something related to ethics will definitely come. Any ethical threat or probably somebody not acting ethically, most likely it is going to come. It is a focus point because for you as a leader, it is always expected that you should act ethically. And that is why in your P-level exams, ethics are highlighted or ethics are covered with very good rigor, and for sure, something is asked for ethics. Now, we have two concepts under chapter number 17 mainly here. One talks about creating public value. Public value means, are you adding something to their existing systems with your business operations? Here what you have to understand is Murray's triangle model of public value. This is coming from the ACCA study hub, where every business, when it is trying to achieve its goals, it should consider these three aspects of a society. Number one, it should see what public value outcome are your operations giving. If people do value your outcomes, or what valuable thing are you creating? Then operational capacity, how much capacity you are using, if you are using the capacity efficiently, and then authorizing environment. Is there an environment where proper authorizations, proper systems are being followed? So that environment also keeps it ensuring that ethics are being followed, because there are authorizations at multiple levels. So this is triangle model of creating public value. When you follow these three systems, then whatever value you create, that is always positive for the general public. Then reporting on public value. If an organization is creating value for the society or not, how do you report that? We can use triple bottom line approach and triple P approach, which talks about people, planet, and profits. You can use triple P, where you are giving your value addition to the people, then the planet, and towards the profits. You can use triple bottom line, and third, you can use this integrated reporting, where the business tries to show how it is creating value for the general public, how its operations are creating something valuable for the people. Now, then comes professionalism. There are fundamental 5 principles of professionalism. One, you have to carry integrity, objectivity, professional competence and due care, then confidentiality and professional behavior. Means you should be honest in your conduct. You should not be biased. You should not be partial towards anyone in the organization to give favor to him. You should be professionally competent. You should exercise due care in your work. You should keep the information related to the client confidential and should not disclose it until it is for any regulatory purposes or for any discussion with the government. You should always portray professional behavior. These are the fundamental principles which every professional, specifically accounting professional, must exercise. Now, ethical threats. Now, there is something where your SBL examiner will look for the name of the ethical threat. Just mentioning that there is a threat will not fetch you marks. You will have to tell which particular ethical threat is being noticed in this case. It is a self-review threat, or a self-interest threat, or an advocacy threat, or a familiarity threat, or an intimidation threat. Self-interest threat, where the professional is interested in a particular project, is interested in the organization, then if you will do any work related to that, mostly it will be biased because you see a personal interest in it. So self-interest threat will not be able to maintain your ethics, your honesty. Self-review threat, something which has been done by you. The biggest example of self-review threat is an auditor should not audit the accounts which he himself has made. That is why the system is somebody else prepares the books of accounts and the external audit is a third party, so that he can give a third eye to the books of accounts. That is to avoid self-review threat. If you find anyone in the SBL exam who is preparing the books of accounts, then approving them, and then checking them or reconciling them. It can definitely invite a self-review threat. Then comes advocacy threat. When you are an independent professional working for the client company or any of the companies, and you are trying to advocate that the client is very good and trying to bring business to the client, then there is an ethical threat here. Being an independent party to the organization, you should not advocate for them. Familiarity threat. If you are too familiar with the company, it can most likely lead to your ethics getting attacked. You will obviously try to favor the organization. You will obviously be giving a report which is favoring them. Intimidation threat. If you are being intimidated, you have been warned for something, you have been blackmailed for something, then the honest feedback as a consultant, as an external independent person to the organization, you will not give a clear report which will bring up facts. Then you need to remember these professionalism principles, then the names of the threats. Then we come, what are the safeguards available when there is a threat? The first thing is remove the situations because of which threat is coming into place. Try to reduce that threat to an acceptable level. And the third, decline the assignment if anything cannot be done. Let's suppose you are having a threat of getting too much familiarity with the director of a company. Now, how will you remove this circumstance? By stepping down from the assignment and telling someone else from your firm to take up that assignment. This is how you can remove it. If there is no possibility that someone else can come up and take that position for you or maybe in place of you, then how will you reduce this threat? Maybe by being more honest, maybe by asking for a third-party review of your work, maybe a due diligence. That is trying to reduce the threat if removing is not possible. Now that reduction is also not possible, then better you should decline the assignment. If your firm does not have anyone to replace you in that particular project or assignment, it's better your firm should not take it. Then is there any model for conflict in case of ethics? Can you resolve this conflict? Yes, Tucker's 5-question model does help in it. You have to find out the answer of certain questions when there is an ethical dilemma. What action you are going to use? Is it legal? Is it fair to do or it is unfair? Is it right or wrong? Will it be sustainable or will it support the environment, or it will just go against the environment, or it will go against the sustainability principle? The questions will answer to your queries if whatever decision you are taking, that is an ethical decision or not an ethical decision. This way also you can resolve if there is any ethical threat coming for you. Now let's come to chapter number 18. 18 majorly will talk about business structures and business processes. Here we'll talk about multinational and global structures. Considering how much dependence and independence they have, and how much global coordination is needed, you can categorize your multinational structures in 4 different quadrants. One, where is low independence and low coordination. That means the division or the business unit does not have much independence. It cannot decide much on its own. That means the policy formulation, its structure, this comes from the central office. You can term it as an international division. The example which I took here was EY-GDS, where the products will draw from the home company and advantage will be from the technology transfer from the head office and then coming to you. So here the simple idea is, geographically the business wants to get spread. It wants to create a division internationally where this division will have very less independence and coordination also will be at a lower level. That means everything will not go on to coordination, but dependence will be more. They will be less independent. Now, they are highly independent. Local independence means the divisional independence is high. Global coordination, however, is low. They do not need to reach out to the head office every time. they are international subsidiaries. That means they operate quite with high degree of independence. The parent company's control is on a low basis. Global coordination is also quite less. Means they don't have to ask for permission every time to the global office. They are highly independent. They create their own systems, they make their own strategies, and that is why low coordination is also needed, because they are taking their steps on their own. On the other side, with international divisions, they are not given more independence. They were not giving more independence, they were just asked to follow. However, on everything, the little steps, they were not asked to take permissions on. For example, why I said EYGDS? From the global office, work comes in, they have to follow that work. They cannot independently decide on which client to be taken up, but they don't have to keep on asking again and again, see, this is how we are preparing, this is how we are taking up the system. So coordination is quite less here. Now let us talk about the other quadrant, where the independence is low and coordination is high. That means in this quadrant, this is just an extension of your global corporate office. Multinationals are split into product divisions. That means international basis management is happening for them. The main strategy is built by the global office. Then their lower, the sub strategies are also made by them, and then these divisions have to keep on upgrading them, take on permission from them, take on the coordination part also. Highly dependent on the global office. These are global product companies where their independence on their own is also low, and the coordination which is needed from the head office is extremely high. Then comes the last quadrant, the transnational corporations, which are very high in independence, but they have very high in global coordination also. Means coordination will be interdependence of resources. They will be needing resources and smaller steps coming from the head office, but on their own they can make their own strategies. That means they are like, make my own strategy, but the resources needed will come from the global office. They are type transnational corporations who are deciding on their own, but whatever resources are needed, they are coming from the global offices. So remember their names. These are multinational and global structures. Then there is a different term which comes into place in this particular chapter, that is organizational boundaries. What type of and how many types of boundaries do organizations have? One, they have vertical boundaries. There will be a senior manager, then there will be a deputy manager or assistant manager, then the manager, or then the consultant, senior consultant. These are vertical boundaries which are created around roles. Then there are horizontal boundaries, the finance division, marketing division, HR division, and then external boundaries which keep the organization separate from other outside players, maybe your suppliers, maybe your customer unions, maybe the trade unions. They keep you different and separate from outside third parties. There are boundaryless organizations also. What are these boundaryless organizations? Three types you can see. One is a hollow structure. Hollow structure is all the non-core activities will go for outsourcing. Whatever is not core to the business will go for an outsource model. Modular structure, where only small parts of the product they are given for outsourcing. Only some parts or small parts are outsourced. For example, McDonald's, it gives some of the parts of the product as an outsource, means in the aloo tikki burger, the tikki will be outsourced and remaining they procure and make on their own, just for example. However, they don't make. Then comes the virtual structure, which is like ours. This structure is a node of different organization setups. We have a connect with, let's suppose, a content writing team. Then we have a connect with the trainers. Then we are connected with someone who is handling the social media. Then we have a connect with someone, let's suppose for mock checking. Then we have someone for telecalling. Then we have someone for handling my emails. However, we do not work with such complex structures, but just giving you an example where these businesses can actually work like this. How will CA firms work like that, like a virtual organization? They will have their audit division attached with some other organization, and they are attached only virtually. They take their assignments, these assignments are completed, and this company, the main company, it signs off the report and sends it off, maybe a consultancy report. So this type of work can be termed as virtual organization, where it looks like a single organization for the person who is outside them. They don't know from where the work is getting done. Likewise, marketing is usually done through virtual organization structure, where a business will allocate its PR management through a outside marketing agency. They can handle the work, only marketing related work for them. This is a virtual structure. They are connected with that organization for their marketing job. Likewise, they can be connected for payroll processing job. I can hire Genpact for payroll processing. That is a virtual structure. But for me, my employees, the payroll is coming from somewhere. They are not bothered from where it is coming. So for the employees, even for the customers, my payroll processing is also my own system, but in reality, I'm getting it done from Genpact or some other company. Okay, so virtual structure looks like the same organization for the outsiders, but this is type of nodes connected from different ways which function together to achieve the goals which the main organization carries. Now comes the next model. Note down please. Herman's process strategy matrix. So Herman's process strategy matrix tells what strategy should be used for a particular business division or for an activity, considering its strategy importance and how much complex is it. Specifically for activities, if the activity is very important but very complex also, extremely important, extremely complex, what can you do? You should improve your processes and do it on your own. You should maybe build teams who can handle it well, because this is really important. You cannot outsource it to be done by someone else, not to be done by someone else. Then comes, if the strategic importance is low and the complexity is quite high, like payroll processing, you can outsource it. I mean, it's not something which is very critically important for a business, because if payroll goes wrong, then something upside down will happen to the company. Not going to happen. So that function you can outsource. Then comes strategic importance is also low, complexity is also low. Put up minimum effort on it. Do not waste too much time. But something which is of low complexity, but it is highly important for you, automate it. For example, the customer care section, lodging a problem, ordering a system, that is highly important for e-commerce. But what have they done? The complexity is quite low. They have created their apps. People can come, place orders. Simple. So automate such processes which are of high importance but low complexity. Automate them. Okay. Then we come to chapter number 19, which is e-business. The important terms under e-business would be e-procurement, because we are in a world where the purchase of individuals is happening through e-commerce. Why not businesses also use it? That means the businesses will follow e-procurement for carrying out its business electronically. Under e-procurement, you will have web-based ERP system. You will do e-sourcing, then e-tendering, e-reverse auctioning, and e-informing. Its word E is the key to all these concepts. Web-based ERP means you will be running an ERP system across a cloud. You will have a simple cloud where all the parties of the organization will be accessing it and will be dealing with each other through the cloud. E-sourcing, finding out a vendor electronically, finding out people who are listed on the web. This person can be my supplier, my component supplier, choosing him. E-tendering, filling tenders online, not through hard copy, that I can do this business. Filling a tender, that happens electronically. E-reverse auctioning. Now here, usually auction happens when the buyers give a quotation, but under e-reverse auctioning, suppliers are giving their quotation that I can supply this particular product at lowest possible price, the best possible quality. That is reverse auctioning. Auctioning is usually from the buyer side, but reverse auctioning happens from the seller side. And then e-informing, giving the confirmation that the order has been agreed to and we can move ahead with the order. That is e-informing or e-confirming onto where what needs to be ordered. Then comes some controls. What type of controls you should apply in your network, in your electronic system, information technology system? There should be general controls where it talks about the loss of data, it talks about the loss of hardware, loss of software, everything. These are general controls where you keep your computer systems. Application controls are specifically for software. It talks about input controls. Legitimate data should be input on the computer. The processing must be using the correct software, processing software or operating systems. Correct means verified, valid, nothing of pirated software. Then output controls, whatever output you get, that should be valid, that should be the way which you wanted them to be. Standing data means the master files where you keep your data. How you want to keep them, how you want to store them. Some controls and some securities must be devised for them also. Software controls. Okay, application softwares are different. So for them, it will be more related to how you are processing, inputting and outputting the data. Here we are typically talking about the software which we are using. Application runs through software. We are here talking about the softwares. For example, virus control is a software, but virus protects your data from many malfunctions, right? So keep that difference in mind. Softwares. On the software, what should we do? Buy a valid, reputable software. Number two, it should be original. Then take their licenses, renew the licenses whenever they become due. Especially we see that in our personal laptops related to virus protection. That is the software which actually goes off and we do not renew it and leading to a risk of your system getting hacked or your system getting a virus in it and all destroyed files then for you. Okay. Then comes network controls. Controls related to your network so that unauthorized access doesn't happen. Network doesn't shut down immediately. But whatever controls you put in place, there can be contingencies which can arise. Suddenly something can backfire even if you have tried to control it as much as possible. The word which you need to use in your examination is contingency planning. This is what the examiner will look for, contingency planning. Now again, there will be many words which need to be used in contingency planning. One, having a disaster recovery management plan in place. If anything goes wrong, you should have a management plan. If any disaster happens, a proper plan will try to take you out from that disaster. A proper backup plan must be there. If one particular disk got corrupted, do you have plan B? Simple plan is keep all the files in another hard disk. That's a simple plan. That means you kept a backup for it. Data restoration, whatever has been lost, how you take that again. Installing power backups. Now when suddenly the complete power goes off, how your systems should function, how your systems should run. That is keeping a power backup. Otherwise, whatever unsaved would be there on the systems of people, everything will go away. Buying fault tolerant systems. There are some systems where a small fault does not make them crash down. Buy such systems. Usually these systems are used by military personnel. And then investing in duplicate systems which can run parallel when the main system is used. Means two systems or two parallel systems working together. If one crashes, the other one is still processing. Okay. These are simple e-business related terminologies. See the backup plan, contingency planning. This is what the examiner will look for. Now coming to chapter number 20, what technicals you have here to learn. Number one, smart technology. Mark it as very important. Smart technology, because it is the era today, it has become very popular and very important. We have three main pillars of smart technology. One is smart devices, two is connected devices, and three is Internet of Things. All three very important. What are smart devices? Simply, they make the life of the user easy. It has some inbuilt intelligence to work on its own. Simply, when you use something, it makes your life easy. That is a smart device. Connected devices are devices which are connected to the internet. It can be our phone also. Internet of Things. Now, Internet of Things is a new concept. We have a massive network of connected devices. It is a part of that network. That means under a network, many devices are connected. Internet of Things is that network sometimes or a part of it. Now, what is the main key here? Minimal human intervention is the key to identify if a particular device is Internet of Things or not. Means human intervention must be minimum. That makes a particular device Internet of Things. You cannot say that a ceiling fan is an Internet of Things. No, it is a smart device. It can function the way you want to. It means you have to switch on. It will just start offering you the service of keeping you cool. It is not connected to internet. So number one, it is not Internet of Things. Can it be an internet device? Only if it is connected to internet. Internet of Things specifically will be which has got very less human intervention. Very less human intervention. I have given some examples here. Number one, home security systems. Do you as a human being have to stand with that system to tell him, oh, there is a threat? Now, get activated. No. Home security systems will automatically start ringing if there is any intrusion in your security. If anybody tries to break down the main door, it will automatically start putting up a siren. That is related to Internet of Things. It's not a connected device, it's not a smart device. However, it is connected to the internet, but it is Internet of Things. It's a device which uses many aspects. It uses the security camera, it uses the security lock, then it uses an alarm system, then it is connected to the internet, then it gives you an alarm. So there are many things attached to the same. Smart fridges, driverless cars, they are all using many technologies together. Like we can say home cleaning robots. They are cleaning the house, they are giving you an alarm that the house is clean. Then once the cleaning is done, they immediately go back to their docking station and get parked there. They work using internet. They create a mind map in their system. They store that map of the house in their system and check if one particular room is cleaned, the other room is not cleaned. They will go back to that portion of the house which is not yet cleaned, clean it, will come back to the dock and start getting charged. Right? So these are Internet of Things. Now with big data, you do not have 3 V's now, you have 5 V's. Volume, too much of volume is there on big data. Velocity, variety. Velocity is related to the speed. The data keeps on coming at a very high speed. Variety is a lot of variety of data you see on the big data, on the internet. Structured, unstructured, raw data, useful data, everything. Veracity, the inconsistencies which are there in the big data. Even if we ask for a feedback on one particular thing, 90 people say it is good, still there will be inconsistencies. 10 people will say it is bad without considering many crucial facts of the product. That is being inconsistent or having inconsistencies in big data. And then value. To be of value, the data should be capable of being analyzed. It should be capable of being studied. Random numbers which are given by the computer, you cannot study them. There should be the capability of the big data that you can analyze it, you can structure it, and then you can analyze for dragging relevant information. How many types of data analytics are there? Descriptive, predictive, and prescriptive. Literal meaning of their names tell their definition. Descriptive analytics, when you are analyzing the details of the data. Predictive, it predicts the outcome for a particular set of data. Prescriptive, it prescribes or recommends you the course of action which you can follow with a particular set of data's analysis. So the data will be having some description, this description will be analyzed. It can be used to predict what will happen in the future, and on that basis, it can prescribe you the course of action which you should take. Then comes chapter number 21. We have e-marketing. So e-marketing, there are some models, some accepted structures which are used time and time again. 4 P's of marketing mix: your product, the product's price, the place where you are selling it, and the promotional strategies which you are using. But when it comes to e-marketing, electronic marketing, 3 more P's get added. People or the participants. People you are using to market your product. They can be your staff, they can be your support services. These are the people or the participants who are marketing or playing an important role in the marketing of your product. Then comes the process. What are the processes which you follow for your product? Be it its delivery, be it after sales service, be it how to order, every process. And then physical existence. What is your physical existence? In terms of, it can be a website, it can be an app, it can be a physical store where the customer has to go and place the order. Because it's e-marketing, you need to show the physical existence where you really exist. It's e-marketing, it is on the website basically. Now, when it is e-marketing, there are some 6 I's also. These are the benefits of e-marketing. The e-marketing is interactive. It can interact with you. It can answer some of the questions of the customers. It is independent of location. This marketing is not restricted to one street where a big banner is placed and only the people living nearby that street can see that banner. It is independent of location. The moment you post an ad on internet, anybody across the world, from any place, he can see that ad. Individualization. Some ads are quite individualized to your requirements. Even you see when your shopping patterns are seen by Myntra, maybe Flipkart, Amazon, they start suggesting you as per your choices. So that individualization of offering you and selling you the product is very high in case of e-marketing. Integration, it integrates a lot of different aspects into electronic marketing. It will integrate what is available. It will integrate what are the discount offers available on that product. It will integrate the time of delivery which you can expect with that product. That means many aspects: delivery, pricing, then offers, everything, availability, everything is attached in the same e-marketing part. That is integration of many facilities and many different functions. Industry structure, e-commerce industry structure, how they function. And then intelligence, they are quite intelligent. They recommend you only those products where you have shown some interest in the past or considering your shopping pattern. Then next comes CRM, another important topic under chapter 21 e-marketing. CRM is customer relationship management. So maintaining relationships with the customer. First, you need to acquire the customer to maintain relationships with him. Acquire the customer with full honesty, by full integrity, then try to retain him and then extend him. How? By retaining, you need to give him good services. To extend him, you have to sell something bigger to him. A customer comes and tries to find out a watch worth 10,000. Try to convince the customer to buy a 15,000 watch. That is customer extension. Or maybe convince him to buy something more than the watch. Okay. Now, these are some online marketing techniques which you can use as a business. It can be search engine optimization, is when you click on Google and then you try to search, then your product pops in. Pay per click, how many people click on to the link leading to your business. You do the payment basis that to Google. Trusted feed, where a third party's feed shows your inventory. Then online PR means the media alerting services can be used. You can be represented on someone else's portal. Business blogs can have you there. Then C2C, customer to customer portals can also have you on their content. Online partnerships can be sponsorships, co-branding or branding with someone else, or then using aggregators. Aggregators is like Trivago, where the competitive pricing of many players is reflected. That is aggregator. Then interactive adverts means interactive advertisements where rich media is used because they are more visually appealing for the customer. Opt-in email where emails are sent to customers. And viral marketing when the marketing is done so that everybody sees you, everybody. So that particular product promotion is everywhere in viral marketing. These are some of the techniques. Remember them and try to use them if anything related to online marketing strategy comes into the exam. Now, understanding the customer behavior. When physically the customers visit the stores, try to buy something, the salesman can always read their intentions, can always see the body language, where the customer is trying to resist not to buy the product. But under online systems, customer behavior study is very tough. How do you do that? You take RFM analysis to study the customer behavior. How do you do that? RFM is recency. Recently, when did the customer came for shopping? Frequency. How much frequently the customer comes to shop? Monetary value. Average value of orders which the customer opts every time. RFM is also known as FRAC, where F becomes the frequency with which they come, R is recency, A comes as amount, means the monetary value which is spent by the customer, and C is for category. What type of category is the customer always shopping in? Females will mostly shop into fashion products, fashion accessories. Men will always go into men's apparel, men's pants, shirts, t-shirts. Students will go into maybe online shopping. Gen Zs will go into something of very style statement, something of style statement, maybe the bracelets, maybe the chains they wear. So depending upon what category you keep on shopping, that is given by FRAC. Okay. Now, customer satisfaction. How will you evaluate if the customer is really satisfied? Using the circle approach. Circle approach will highlight if the customer is really happy, satisfied with your product. Number one, tangibles, where the customers consider the tangibles of your product, maybe tangibles of your business also. It can be the product, it can be your business physical facilities, it can be your communication system, how you look on your websites. Then the customer's perspective on relying your product, the reliability which you bring to the customer. How responsive are your services for the customer? Do you give any assurance to the customer or the employees that their problems or their points will be considered? And then empathy, having that empathic attitude towards the customers as well as the people working with you. These are some of the features or qualities which must be focused by every business, and even points must be given on all these to check if the customer satisfaction is high or low. Now there are 3 stages in the circle framework. 1, understand the expectations of the customer, communicate them their expectations will be met, and then deliver the promised service. First, you have to understand what they are expecting. Number 2, promise them that this will be given to them. And then finally, give what you promised. So these are simple stages. It will help you to structure your answer well. And at the end, e-marketing will have customer extension. We were saying that extend them, resell them the similar products, cross-sell related products, upsell, sell more expensive products. They come to buy a 10,000 maybe INR watch, sell them 15,000 worth watch. Now, with customer extension, there are 2 main topics here. One is propensity modeling, and second is the sense, respond, adjust model. These are 2 models which are used for customer extension. What is propensity modeling? You will have to understand the customer behavior, then recommend future products for them. So as we always say, we always notice, once we have shopped something else on Flipkart or Amazon, the next recommendations come related to that only. Then comes the second model which you can use, sense, respond and adjust. Sense the activities of the customer. Respond by communicating on relevant parts. If the customer is searching for maybe the bags section, do not recommend clothes to them. And then adjust, looking onto the suggestions and the responses coming from the customer, adjust your future communications. So simple as that. E-marketing is about more observation and avoiding very quick attacks on the customer to sell your product. So it's always better to observe first, then adjust your communication and then recommend to the customer. Now we'll go ahead with chapter number 22. Give me a small break of 5 minutes, then we get back to chapter 22, 23 and 24. We'll catch up in 5 minutes. Huh? And we are back. So we need to start with chapter number 22. How we go about it? So this was project management. Majorly, it talked about how to accept the project, what benefits will come from a project, why I took this here. Not really something very important, but there are some terms which you may have to remember. Whenever talk about the benefits from a project, maybe in the exam you are being asked to convince the board of directors on a particular project, telling the viability, telling the suitability and the financial numbers, and making everyone agree that it's a good project and we should take it. That may be a task for you in the exam. When benefits will be discussed, try to categorize them into 4 different ways. One, observable benefits which will come to the business. Some benefits which are measurable, maybe in numbers, and then some which are quantifiable. Exact quantity can be identified that this much revenue we have got more, and then financial numbers. Talking about the benefits of a project in an unsystematic way has been a pain point for all the examiners every time. So they always ask you to categorize and then talk about the benefits of any project. Maybe you can keep financial benefits separate. We can keep observable, which are non-financial, non-numeric benefits separable. Then something which can be measured and quantified. Keep them separate and then discuss them one by one. Now the documents related to the project. Business case document, which is specifically used to convince the seniors that we should pursue this project. What elements a business case document should have? It should have the introduction about the project. It should have an executive summary clearly telling what considerations they have taken, then what options were available, why the board wants or why the project manager wants this project to be taken. Then the description of the current situation, where the business stands today, options which you have considered, analysis of the cost benefit coming from the project or different options, impact assessment. If the project is accepted, what will be the impact of it? And then risk assessment, what are the risks attached with the project? Recommendations. As a project manager, what are your recommendations? And then appendices, where some detailed analysis, maybe the cost details must be given. PID, PPR and PIR. These 3 are quite confusing for some students. A project initiation document. Once the business case is put in front of the senior management, they approve the project, then comes the turn of a PID. PID will have the business case document plus the plans of implementing the project. Every time whenever the situation will change, PID will be updated. PID is mainly to focus upon the completion of the project. Then comes PPR, that is post project review. Once the project is done, the team should go back and check, look back and check what went wrong, what was wonderfully done, so that whatever is good should be continued in the upcoming next projects. Whatever was a challenge, that doesn't come again in the upcoming next projects. Then post implementation review, implementation of the output produced by the project. Now you are a company which is carrying on projects for the clients. Now ask the client, once the purpose for which the project was taken up, has the testing on the purpose being done? For example, you were working on a project of developing a robot. You developed the robot and handed over it to the client. Ask the client if the robot is functioning well. That means it focuses on the product delivered by the project. You took up a project to create a highway. Your client is the government. Ask the government if the highway is functioning well. If there is any challenges coming in, the government tells you that this is the challenge. From the upcoming next future projects, you should focus on that this was a problem in that particular last project. We need to take care of it here. So the same mistake, the same challenge doesn't come in the upcoming projects. So remember which document is used at what level. Business case document is to get an approval on the project. Project initiation is on the project plan, how you will implement the project. Post project review is once the project is done, the project implementators, they only check what went well and what didn't go as per plan. Post implementation review is taken as a feedback from the client who is using the project's outcome. So these all four have different uses. Now on chapter 23, financial decision making. Other points are quite easy, but something technical for not for profit organizations. What is the intent of they getting funded? One is carrying on the operations. Number two is covering their core costs. Now what can be there in the exam? What you need to remember is the core cost. What are these core costs? Core costs are built under three headings. One, related to the management. Two, R&D. And three, support services. These are the core activities of any not-for-profit organization. Expenses which are incurred related to the management of the not-for-profit organization. R&D involves some expense to be incurred. And three, the support services. Support services means maybe the IT, the stationery, the telephone services, maybe the travel which is done by the people of the not-for-profit organization. All these are support services and they need money. So this money is arranged through funding. Now funding SBUs. We saw one BCG matrix in the previous revision sessions. Here why we are again taking the BCG matrix is to decide which business unit must be funded. Which business unit must be given more money. Cash cows. Do you need to give them money? No. You are not supposed to fund as a parent company or maybe their leader. You should not fund the cash cows. They themselves are able to bring cash inflows for them. They already have large net cash inflows. Stars, they need investments. Now, however, some investments can come from cash cows, but stars need reinvestments because they are growing. They need money to remain as star as long as possible for as long as possible period. They need money. Problem child, they also need investment from your side. Until the time they are growing, you should keep the dividends very low. So investments is needed because they are growing, and when they are growing, dividend distribution will unnecessarily bring cash outflow from the business. Dogs, no investment must be done for them. Anyways, we had decided that they should be discarded. So something which we are planning to discard or dispose of, why do we need to give them some funding? So that's the problem with dogs. Do not fund them. Now, another important thing is where should the funding come from for a normal business, a profit-making business? What are the sources of finance for a normal business? It's a very simple type of a thing which you have been studying since years. One is equity source, second is debt, third is other sources. Under equity, you can internally generated funds you can use, ordinary shares you can issue. These are long-term finances both. Under debt, you can opt for long-term debt. You can issue loan notes or maybe debentures. Medium-term loans or leasing can be done to arrange for funds. Then short-term loans can also be taken. So be it leasing, be it short-term loans, they are of or shorter or medium term. But debentures, redeemable preference shares, loan notes, they are all sources of long-term finance. Others means asking for donations, government grants, and initial coin offering, where you ask for funds from people, your investors, but you give them coins in return. These are some of the sources. Every source has some benefits attached, some challenges attached with them. The major challenge comes is you dilute your ownership. The ownership shifts from some people to some new people. That's the biggest challenge with all of these. When it is debt, ownership is not lost. But debt comes with security, commitment on principal repayment, commitment on principal plus interest. That becomes a challenge with debt. For government grants, there can be conditions attached to it. So all these sources of finance will have some benefits while some challenges attached to them. Whenever you are recommending any source of finance in the exam, do talk about the challenges and benefits both. Now, what factors should be considered when you are choosing a financing package? One, the cost involved with it. Equity doesn't involve any cost. Debt involves a committed cost. Control. Control means ownership passing on to someone else. With equity, control will go from you. But with debt, control remains with you. Availability. Is it easily available? For every business, debt is not something that it will be given to you just like that. They struggle in getting loan. That means availability becomes a problem. Gearing. Already high, you are already highly geared. Consider not taking debt. Security. Do you have enough security to offer for debt? Cash flows. Will you be earning enough to fulfill your commitments related to debt? That means you should have those cash flows to honor the interest and principal payments on debt. And then exit routes. Can you prepay the loan? How will you exit from the loan? How will you exit from the equity shares? Do you have a right to buy back the equity shares? Do you have to repay the debentures or preference shares before their due date? Do you have the option of repaying early settlement of the loan? So all these are another aspect which you should consider before deciding if you have to go for equity financing or debt financing. Now, something more, decision-making techniques. What all decision-making techniques are available for you? CVP analysis is used when you have to do some product-related cost and profit-related calculation for a short-term period. Marginal analysis. Again, special contracts to be accepted or rejected, closing any business division or department or a particular product. But long-term decision making will hit upon NPV, which will go across years. Across years it will go. Payback period, average rate of return, and internal rate of return. These are all coming from FM knowledge, your FM studies. So all these calculations involve a lot of working for many years. Then approaches to budgeting. There are 4 different types of budgeting approaches. One is a rolling budget or continuous budget, when 1 year's numbers are taken to the next year with some changes in it. Incremental budget. Okay, rolling budget is quarter wise. You go quarter wise and make some small changes. While incremental budget is where the environments are usually quite static. Complete year's budget is there. Some plus percentage you are applying everywhere. So the situation doesn't change. With rolling budget, you take only a quarter and keep on adding on the new numbers to it. But incremental budget is for the year and you take some additions to it as per the new situations. Zero-based budgeting happens when you start with zero, because the earlier circumstances do not exist today. So when the environments are changing very quickly, you adopt zero-based budgeting. Activity-based budgeting, when your product utilizes or goes through many activities. So you will have to see the cost drivers, then based on that you will have to calculate the overhead allocation rates, and on that basis budgets need to be prepared with proper allocation of overheads to all the activities of a product. Now remember the most important thing in budgeting, the controllability principle. Managers are responsible only for the variances for which they are responsible or which they can control. You cannot make them responsible on those areas which are not controllable by them. For example, the sales went down because of poor design of the product, which was approved by the top team. The strategic decision was to change the design of the product. You cannot blame the manager for lower sale if the sale was lower because of change in plan, means the planning variance. So controllability principle must be kept in mind whenever you are discussing the performance of any of the manager and variances are given to you. Always talk about controllability principle. A manager can be held responsible only on those variances which were controllable by him. The design, it was not his part. And if a variance is arising because of planning, then he cannot be blamed. On only operational variances, he is responsible. Okay, so controllability principle, remember this concept. Then we come to managing strategic change. Now some keywords which you need to use whenever any change discussion comes. There are some triggers for change. Why do a business has to change? One, there is a competitive pressure. The whole industry is changing. We need to change. Number two, there is regulatory pressure. When any new IFRS comes in, you have to change your approach of booking that item in the books of accounts. That is a regulation, change in the regulation. And then when you do it for the first, as a first business, first mover advantage comes to you. For example, when it is pollution, the diesel gensets are not allowed to function. The first company which creates a green DG set gets a first mover advantage because they are the ones who will first offer a green DG set to the customers. Till that time, there is no competitor for him. So that's the first mover advantage. Now, these three technical terms the examiner may look for. Why will a company try to change? Because of competitive pressure is there, then regulatory pressure comes, and then first mover advantage is available for companies who adapt quickly. Now, we have different names for strategic change. With the extent of change, we say this is realignment or transformation. Their literal meanings you need to remember. Realignment is small here and there. Transformation is big change. Big bang is the speed of change. Very fast change is a big bang change. But going it incremental, going the change slow is incremental change. Now you have to use the words big bang, incremental, transformation. Transformation is changing the business at a very big level. Alignment is small changing here and there. Big bang is changing with a very high speed. Incremental is changing with a gradual and low speed. Now these four names come into place. One, evolution, when the change is slow but is quite big. It's a type of an evolution. You can remember evolution with the evolution of mankind. We gradually became humans who can stand on 2 feet from monkeys who used to walk on 4 using 2 hands and 2 legs. So remember that example, and that pic we used to be shown in our classes, showing the evolution of man. Number 2 is a revolution, when the change is at a very high speed and it is a very big change. Green revolution, the growth of wheat across Haryana, Punjab. Then 3, adaptation. The speed is low. Gradually and slowly we are adapting. Adapting means slowly we are changing ourselves. The change is also not very big. That is an adaptation. And reconstruction is when the change is not quite big, but it is happening very fast. Means the change, speed of change is very fast, but the extent of change is not very big. It is reconstruction. We are reconstructing something, but although at a good speed, but not too much changing. That is a reconstruction. Now, why do people resist to change? Again, some technical terms. Parochial self-interest. Search what is this, you will find it interesting. But use the word parochial self-interest. Misunderstanding, not able to understand why a change is needed. Low tolerance to change. People have a tendency of not changing. And different assessments of the situation. Everybody believes, no, this would have been a better idea to change. This would have been better if we would have adopted this instead of what we are being asked to change. So different people assess this situation in a different manner. That is why they do not accept what is being given to them as a change. Now, because change is needed, people will resist. What can be done to overcome that resistance? Kurt Lewin's model to overcome resistance can be used. One, unfreeze. Whatever they were doing, the present situation practices, unfreeze them. Change. Now change their attitudes, communicate the change, train the people on the new systems, how they need to be followed. And then refreeze or stabilize the change means now ensure, refocus, highlight that this is what you are going to use now. That is refreezing. So unfreeze, change, refreeze. There is another model to handle change, that is Levin's force field analysis, it says that the current state is here. There are some driving forces to change. That means there will be some forces which will ask that the change should happen, but there will be some forces which will stop you from changing. A balance needs to be built in them. That's Levin's force field analysis. What asks for changing? Fresh challenge in the job, more rewards will be there, job discretion, or maybe your decision making is enhanced. That enhances. These all are forcing you to change, but there will be a backside of the mind which says no, don't change, don't change. What is that? Anxiety about the job security. Then the change seems less stimulating and maybe your belief is it won't give you much benefit. And then fear of loss of power. Maybe the change can bring situations where I lose my power. These are the restraining forces which will prevent you from accepting the change. Now, how to bring this change into place? By balancing them or by increasing the driving forces and demotivating the restraining forces. Demotivate, let down the restraining forces and motivate the driving forces. Okay. Now, Kotter and Schlesinger leadership styles to deal with resistance. They say let the people participate, educate them, communicate them, facilitate them, support them, manipulate them, negotiate with them, and if nothing works, use power. These are discussed in detail in the session. Here you just need to remember these 6 items. Then there is Context for Change by Baligan and Hopeley. They use this kaleidoscope and suggest a number of features which should be considered before making a change for people. They say it has 3 rings. The outer ring, which talks about major things, strategic things. Then the inner ring, middle ring, which talks about the features which must be considered when you are putting or forcing a change on the organization. And the inner circle, the choices which we have when we have to implement a change. We can design some choices, we can change the path, we can change the start point, we can change the style, we can change the roles of the people. These are the options of how the change can be done. What are the features which must be considered before bringing a change? What time is available for you? Within what time you have to bring the change? What is the scope of change? Is it a very big change or very small change? Preservation of the change, diversity which will be needed for the change, capability of the people to adopt to the change, capacity to take that change. Are the people ready to take the change? How much power you have to bring the change? So remember these words. Now, POPIT model, the 4-view model to manage change. Organization, process, people, and information technology. So P is people, organization, this P is for process, is IT is for information technology. That means here you study these 4 and considering them where you have weaknesses or strengths or opportunities, then suggest improvements and changes. So POPIT model says you have to study these 4 aspects of every business and then introduce wherever change is needed. Wherever there is a weakness, based on that weakness only change. Do not start changing things even when maybe there are something good things happening in a particular department. Maybe people is already doing well. Do not change them. So first identify if it needs a change, then only make a change. That was all for the SBL revision. We are done with all the chapters till 24. Quickly revisit the revision. Wherever you feel that there was a detail which you are not able to recall, you need to revisit the session and have a look at that concept. Because it was a revision, I didn't go into deep, because otherwise then this would not have been a revision, instead would have been visiting the important topics in detail again. So revision means covering everything which needs to be learned. If you are missing on anything where the details are still needed, reach out to the class session, take the detail, in these notes only add on to that detail. Write whatever you understood from the session here, so that when next time you are visiting the notes to revise back again, you have it ready in front of you, that this is the detail of that point which I missed when I was first seeing the session. I hope these sessions will be helpful for you. Do prepare for your exam well. All the best. Keep on studying, keep on growing. Thank you so much and take care.